Guys, welcome back. A new week, exciting week, interesting week, and if not the week, obviously, of not 2026, but the week of January, which is the potentially most important one. First of all, we got important data, the big ones, right? Verizon, American Express, we got Visa, Mastercard, and we got Microsoft, Tesla. So big earnings from the US are due, and that is going to be paired with a ton of other potential volatility when it comes to the interest rates decisions we want to examine as well. So what's on the horizon this week? And that's the important one. We got news events and they are kind of quite interesting. This week we got consumer prices from Australia. The Australian dollar in the meantime has been quite strong. If consumer prices might be able or will be able to rise further, this could give the Aussie another boost, and the Australian dollar might be up and kind of up for grabs, I wanted to say, up and running even towards higher levels, could potentially push the market momentum even higher, especially with the current weakness of the greenback. The US dollar is going to kind of move to the downside as we expect for now. If we see on Wednesday, the interest rate decision is going to kind of give some hints towards further rates being on the weaker side of things, this currency pair might move through the moon, as we know. The market's tendency has been kind of pushing towards the technical resistance zone. If this one gives way, upside momentum might occur. The market might even move to the higher part, right? Generally, it looks positive. We can see that the market's traded at around this 50 moving average, which was a technical resistance zone. And now it looks like since this zone has broken, whoops, that's not a moving average. That should have been a trend line. In any case, let me kind of remove this one. But the market's tendency is pretty clear. And that looks, as we said, furthermore, like the market is pushing higher and the market motivation potentially ready to push this Australian dollar even towards higher price levels. Stock markets are still on the move as well. And we saw, and we said, I said early on that interest rate decision is due this week, right? So, and with that, we might see a further positive momentum. Let's move towards the FOMC, right? So we don't get any rate adjustment, at least for now not. We still expect that now they say on the same camp here, that there's no rate adjustment happening as it is. As currently the situation looks good, the US dollar is going to weaken further. This helps equities in the US. They are moving higher. In Davos, Trump stated it's the best economy in the world. We are moving far beyond. Some of the terms he kind of put out there were not overly bad, to be honest, right? So if you're looking at the structural issues in the Eurozone, reforms needed are not happening, are not being implemented. But the US, as the leading energy core of the world, is moving higher, and that's going to help markets as well in the Eurozone, at least potentially medium term. That said, if we get any hints, if we get any surprise rate cut, might be on the cards as well, we could see that the market motivation is going to move further. Let's move towards the S&P 500 now, because technical patterns point towards those are the resistance areas. We're currently about to retest the upside here. The market fell and started earlier at the lower edge, right? But it started to trade this week on top of this 50 moving average. The market is now ready to kind of push beyond. And I'd say we are kind of quite well on track to move to this technical resistance zone, while a breakout is what we look for to get access here, something which is outside my screen right now. But if the market breaks higher, we would wait for a pullback potentially, but a look at checking our stock portfolios, pretty much a cool one at the moment. What's going to happen currently? Well, we got the data as well on Wednesday. Microsoft, we got other big shots which are reporting their quarterly results. But what we see currently is that generally the uptrend is pretty much in place of the broad market base, right? Not only the fantastic seven, the magic seven, however you want to call them, kind of pushing the market higher, but it's the broader base. The more than 60% of the stocks have been rising so far. And that's going to be something which is coming from the general market sentiment. So generally we see falling interest rates, positive economic data, plus obviously kind of the data of the company's earnings season, as said, in full swing, is what is going to support the market potentially even moving higher. So we remain positive. We see that the markets have been on the edge here, and we see that the upside potential might be due to continue. Whether this can move and support the German DAX is going to be the question you might have for now, potentially, right? So we see that currently the DAX has also started to weaken slightly, also started slightly lower. But what we can see as comparing it with the US, the market started lower, obviously US market pre-market, but the DAX started slightly lower as well, but not as low as the S&P 500 if we compare the two. Yeah, so the S&P started trading very low here this week. Whether we can use this as an indication might be in question, similar to the Nasdaq, but the DAX started slightly lower only and is just now potentially attempting another push higher. The technical resistance area here has broken. Obviously, we talked about this. This happened already a couple of weeks ago, but with a break here, now the market stopped trading right on top of this support area. So the market only stopped here at this point, and now we see the upswing potentially ready. This week, by the way, we got also data from SAP, and SAP's data might be something quite interesting, moving the market motivation and the DAX even higher. What else is up and running? Well, we had the interest rate decision out of Japan last week. There was no surprise. There was no rate cut whatsoever. Obviously, there was also no rate increase. Remember, late last year, the Bank of Japan was adjusting interest rates and kind of pushing markets slightly lower, right? Obviously, kind of they increased the rates. Now it's the highest within the last, 30 years, something like this, 0.75%. And the outlook remains quite strong, quite positive as well. So rate increases might be implemented if the economy allows. And that was what caused the market late last week in trading to push lower. And we took this with a pinch of salt, first of all, but we saw it, the dollar against the Japanese yen. The market's trend has been unbroken. The upside is pretty much still intact, but this market was also seen kind of moving in a sideways pattern, in a kind of bit of a zigzag pattern quite a few times in the past. So a resistance area here always caused the market in the past to weaken, right? So quite a bit of a correction had happened, and now we see the same is due. Next targets could be 50 moving average up here, or early on even. We might see that there is some lines in the sand we could see. We observe the market already broke this kind of slowish support area. Next one up, if we see, is potentially this range here. That's the 153 area. But if this area breaks, then there's nothing much to be seen until 151.40, 150 whatsoever. So we could see that the market is going to even push further to the downside and maybe ready actually to kind of move towards lower areas. One trade we closed in a loss, unfortunately, because we closed it slightly early, was the euro yen short. Nevertheless, this trade is also or would be up and running. But what we also have open is the pound against the Japanese yen short. This is another short, which is kind of quite interesting. And based on the monthly chart, the candlestick pattern indicates there might be a bit of a bigger correction. If this pin bar candlestick will be printed like this, we still have a couple of days until we find out, basically this entire week, until this is ending this way. And then we would expect as well some more downside motivation. The market is trading and has been trading at a bit of a technical resistance area here. This zone we quite like, and hence we expect the markets to weaken. If the pound JPY weakens further, we could see it maybe moving, depending on the time frame, when it moves lower, towards the 190 whatsoever range. So there is quite some room for momentum towards lower prices. Guys, that's the trades we have on. The euro pound we could also talk about, because that's another pair where we got burned quite a few times in the past. For now, it looks extremely interesting for us. Why that? We see the euro pound trade and we are well in our two positions in profit. The market retraced slightly higher. It looked like the market, oops, might kind of move to the upside. But the shorting opportunity here is quite cool, especially since last week the market went higher initially. Friday was the game changer. The market started collapsing, and now another entry opportunity might even be to the downside, just if the market starts breaking lower, which is what it looks like for now. So we remain interested here. We remain in our open position, and the market, based on the long-term monthly chart, looks weak on the weekly chart. Retraced higher, but looks weak again on the daily chart. The market weakens again. So you get plenty of opportunities here shorting this market if you're keen, by just paying attention to whatever time frames you focus on. Guys, that's it from our outlook for the week so far. Looking forward to get your comments under the video as usual. Obviously, kind of stay tuned for further market updates. There's going to be quite a bit of stuff to talk about this week with all the earnings on Wednesday, with the other results. And see you soon. Leave your comments on the video. Thanks for tuning in. See you then. Take care, guys. Bye.